Happy New Year, guys. Happy New Year, guys. 2023 is here. Today is the 2nd of January 2023, and I'm so happy. I don't know about you guys. It's obviously promises to be a wonderful, glorious, and prosperous year for us all, right? Especially in this business of trading. Yes, indeed. So, I'm going to get that out of the way. I've been excited for the market as well. I took a break as I want to believe some of us did, to spend time with family, to just refresh, and then to set the trading plan and the trading journal right and all. Right. So it's a pleasure once again having you guys here at my channel, CSA Forex Common Sense Approach to Forex Trading. And of course, my name is Tolu. Yes, indeed. This year we have a lot in store, and we're going to be dishing it out at the appropriate time. Now, I want us to focus on the Euro USD. The market is still very, fresh for the year. So, of course, the volatility is still going to be low. We have some key data coming out today for the dollar, and also we have the first NFP of the year as well coming out this Friday. Yes, right. So let's just quickly flip over to the calendar. It's always good to look at the calendar from Forex Factory. Joe's job openings for the dollar and FOMC also later in the day for the dollar as well. So expect some good volatility here. And of course, on Friday, you have the big one, the non-farm payroll unemployment rate. Of course, that tends to come with good enough volatility to shake the market. So you do not want to get, caught on the wrong side early in the year. That could easily be demoralizing. And that's why you need to ensure that you have your trading plan and your trading journal. It's a new year, so please, you can start a trading journal now, right? So now let's quickly dive into this area properly, and we're going to be doing multi-time frame analysis approach from the higher time frames down, right? From last year, we had a big drop, and people were talking about parity because the Euro USD got to parity, and then what some might not have known is that from here, from the monthly time frame, where we have support, as you can see, right? After getting even below parity, as you can see, it was the lows of last year at about 0.95, which happened to confluence with this area here. You can see some support resistance in this area from here, as you can see. So it confluenced with this area because some might be asking, oh, why did it bounce here? If you want to know why price bounced at a particular area, it's always good for you to look to the left, right? And that's what we have over here. So now presently, Euro USD has gotten back to this area of former support. So it's now here as fresh untested resistance. Yes, it's coming here for the first time as untested resistance, and December candle was a pretty big one, and of course we're waiting to see what we have here in January for further clues. Don't forget January might be a bit slow as well, so always try to let the market come to you. Do not try to rush into the market. Do not try to force anything out of the market. Now let's drop down to the weekly time frame. As we said, this is a multi-time frame analysis approach. From the weekly time frame, you can see the same area that we looked at earlier from the monthly here, right? That's about 1.06, 1.07 area of interest around here, right? It's always a range, it's always an area of interest. Now if you look very well, we have something here, this area of supply that the price has now got into, and we're waiting for further clues here. Earlier we had, that was last year December, we had this bearish pin bar. But if you notice the bearish pin bar, the bearish pin bar, actually you need to wake up. The bearish pin bar, right, never broke, and then it's pushing higher and then giving us some inside bars inside that same bearish pin bar. So we're still looking for more clues here to find out whether this supply area will hold and whether we could take it back down to this area, the lows of last year. And of course, that would be good enough for how many pips? That would be good enough for about 1,000 pips. So that would be a good way to start the year if this happens. You can see we've dropped down to the weekly time frame to see that there's a possibility of 1,000 pips to the downside, and that is if this area of interest holds for the monthly and the weekly. You can see on the weekly we've boiled it down to this area of supply zone here, where we should have sellers on a retest, right? This has not been tested as supply yet, so this is the first time there, right? So now also let's drop down to the daily time frame, right? And the daily time frame, what we had earlier, you had this wedge, and you can see this wedge here. Also we had this bearish what's it called, bearish engulfing here. Let me just zoom in a bit so that you can see that. You can see you had the bearish engulfing here, and then that was December when liquidity was drying up, because we said earlier that liquidity would dry up towards the festive period, towards Christmas period, which of course we noticed because Wall Street and other key areas where obviously the banks, top banks, you have good volatility coming from the Barclays and the rest, Morgan Stanley's and the rest. Obviously they were on holiday, so of course you wouldn't have good movements in the market, right? So of course things should pick up much better, well, maybe this week, next week, but I'm more looking at next week, so to say. So we had this bearish engulfing, this bearish rising wedge, right? As you had this rising wedge bearish for selling position, you can see here you didn't have any follow through, and it has been going sideways for a little while now, as you can see. But this is the daily. If you notice something, we have been dropping down in time frames also to look for a discounted entry. A discounted entry simply has to do with smaller amount of pips that will still give us that same amount of reward of 1,000 pips. And who knows, it could even break out from this lows of 0.95 much lower. But when you could have a smaller entry for a bigger take profit, now trust me, this is ultimate. This is how you are supposed to be trading. So these are the kind of trading opportunities that you should be looking out for this year. Do not rush into the market. Don't take half-baked trades, but rather let things come to you. Follow your trading plan and keep records. Now on the 4 hours time frame, now you can see things are getting more and more interesting. As you can see you have this rectangle here showing the sideways movement for the fiber, for the EURUSD from the 4 hours time frame. And if you look at this over here, quite right, we have this small looking rising channel here, and who knows, you might as well have a price action like a bearish engulfing or a bearish pin bar hammer here, or it might as well get to these highs here, to the top of this rectangle range here. You might have that candle here on the 4 hours. The candle, by the way, is your trigger, is your reason for entry. So you could have it here, and then you could have it here as well. As you can see the channel, you are basically using your eyes to spot what's happening in the market. So once you know what's happening in the market, you have a good enough idea of what most likely is going to happen next. So it's all about patience, because also you don't need too many of these trades. One of this particular trade in a month, trust me, is very good, because you could obviously make more than 10 hours if you do it well. I don't want to tell you more than 20 hours or 30 hours, but trust me, you could do good numbers when it comes to the risk to reward ratio. So look out for what we have here, and you can see this is the 4 hours time frame. Let's see whether we can drop one more time frame. I don't want to drop too low to the 5 minutes, 1 minute time frame. No, I don't want us to go into the scalping territory, because there tends to be a lot of noise in that area. So this is the hourly time frame. The hourly time frame, as you can see, it's looking very dirty. When I say dirty, it's very messy in the sense that you can see candles, the price movements in a scattered manner. This is what I talk about when I say dirty. So anytime you hear me say dirty this year, this is what I mean. So it's looking rather dirty here. So that means that 1 hour time frame for me is not really a good one to drop down to until maybe it cleans up a bit. This is looking too chaotic compared to the higher time frames where things were a bit cleaner, right? If we had moved over to like the daily, you can see it's a bit cleaner and all. Let's just check the 30 minutes. The 30 minutes now, if you look very well, is looking a bit cleaner, and it's looking like it's moving to the upside. As you can see here, it's gradually moving to the upside, and that means that I would like to see price get to these highs here, right? Meaning I would like to see price push higher here, right? And we have like a double top pattern, and then you wait for your trigger here to sell, right? If you noticed, the directional bias on the monthly, weekly, daily, 4 hours, 1 hour, and 30 minutes has been to the downside. So I'm looking strictly for bearish signs only if the dollar decides to, play otherwise. So you need to also look at the flip side, the other side of the coin, because the market would also go the other way. So always ensure that even if you have a bias, you are still open to, the market conditions changing at the end of the day. Now, with that said, I want to gradually start to round up. And as a summary, for the Euro USD, the fiber, we're looking forward to selling opportunities from the monthly, weekly, daily, 4 hours, all the way down to like the 30 minutes time frame. And of course, on the 30 minutes time frame, it's very possible that you could have, as an example, maybe you could have like 15 pips stop loss. You could have like 15 pips stop loss. And then you remember your take profits on that monthly, which was about 8,000 pips, right? 8,000 pips. So look at it. If you have like 15 to 25 pips or 20 pips stop loss for a 1,000 pips take profit and it gets there, what is the risk to reward ratio? I believe that should be about 50R. That's why I said I don't want to scare you, but this is a good scare, by the way. But if you look at it this way, you will understand, better that this is how you should be trading. This is how you should be looking at the market. Look for solid opportunities. Wait and wait. That is patience. You need to exercise patience and discipline. That's why at the very beginning I talked about the trading plan and of course the trading journal. Those two come in, very important, hand in hand. Now I want to round up now because I could talk on for hours and I don't want you to, watch this for too long. I want you to be able to watch this a couple of times so that it will easily stick and you can take advantage. So this was EURUSD multi-time frame analysis approach from the monthly all the way down, and we stopped at the 30 minutes time frame. Don't forget, we also have some key data, some key news coming out later today and later tomorrow. The FOMC, sorry, I don't know. I think I'm still in the holiday mood, more or less, right? And then we have the FOMC tomorrow, and we have the NFP coming out on Friday as well. So I want to say thank you guys for joining me. This is the first YouTube for this year. I hope it has been able to give you some sort of value. If you have any questions, feel free to reach out. If you are interested in a mentorship, my mentorship this year is going to be different. I have it simplified. I want to take you to your destination, right, in a short period of time. I don't want you to, be learning. Let's put it that way. I don't want you to be learning for months. I want you to hit the ground running. So throughout the little break, while some people were still looking at the charts, I was simplifying, my trading process. Yes, I'll simplify my trading plan and my trading journal. Trust me, it is mind blowing. I even scared myself on how I could break things down even simpler. I thought it was simple enough, but I broke it down to make it even simpler the more. So if you want to find out more about that, how we could work together for a mentorship, hit me. The link will be in the description below, and anything you need, comment in the section below, and let's see how we can work out 2023 being an awesome year for you and of course also for me. There's a lot to be made, and of course we need to follow price, follow the market, whether it's the forex market, it's the crypto market. Don't worry, we're going to be talking about Bitcoin and a few cryptos as well in this year as well, right? So thank you guys for tuning in. I want to say thank you. If you're new to the channel, don't forget to hit the subscribe button, turn on the notification bell, give this video a thumbs up. If you have any question, comment, and also share. Thank you guys. It has been a good one, and of course catch you sooner than later. Cheers guys. God bless.